$3,648. That's the price of a single Ethereum right now. And get this, Bitmine is holding a whopping 833,000 Ethereum. That's enough to push them past Sharplink and make them the largest Ethereum accumulator in the entire market. On top of that, Ethereum ETFs just posted their biggest weekly inflow ever. $2.18 billion in fresh buying. All of this is blowing past what most analysts and investors were expecting. So what's really going on here? Is Ethereum still a golden opportunity? Or is this just a sharp rebound that's setting up a nasty bull trap that could leave a lot of investors disappointed? Welcome back to Crypto with Harry. Week 3 of July has been another record-breaking week for the crypto market. For the first time ever, total market cap smashed through the $4 trillion mark, right after Bitcoin and XRP hit fresh all-time highs. And Ethereum surged over 20%, fueled by massive institutional buying pressure. And just when you think that's enough big news for 1 week, the US passed the Genius Act, officially legalizing stablecoins and opening the door for a sector that analysts believe could soon hit $1 trillion valuation. So, what exactly is going on with Ethereum right now? What did the US government just announce, and how have President Donald Trump's latest moves played into all this? Don't worry, I've got a full breakdown for you in today's video. First, let's pull up the Ethereum chart together. What we're seeing here isn't just your average bounce. In my view, this is a seriously powerful rally that's got the entire market's attention. From just $2,200. Ethereum has skyrocketed to around $3,600 in a very short period of time, hitting its highest level in the past 6 months, since January 2025. And I don't see this as some random technical rebound. To me, this is a clear technical breakout, the kind that signals a real shift in momentum. It's also telling us something important. Market sentiment is turning optimistic again. Over on Polymarket, which, if you don't know, is a real money prediction platform, the betting odds for Ethereum to break above $3,800 this month are sitting at a crazy high level. And honestly, that lines up perfectly with the bullish expectations we're seeing from investors right now. The next key price targets on everyone's radar, $3,900, and the big psychological milestone, $4,000. With many traders betting, we could see those levels hit as soon as August 2025. And behind this monster rally, in my opinion, the biggest driving force right now is the massive inflow into Ethereum ETFs. Leading the charge is BlackRock's ETH fund, pulling in a jaw-dropping $499 million in a single day. That's almost 70% of the total daily inflow. Right behind them, Fidelity came in hot with $113.3 million worth of buys. And let's not forget Grayscale's Ethereum fund, which scooped up another $54.2 million. Here's the kicker. From the start of July 2025 up until now, the total amount of new money flowing into Ethereum has hit $2 billion. That's not just a little higher than previous months, it's way above anything we've seen in recent history. And if we take a closer look at whale activity, those massive players who can move markets, it's clear they've been loading up heavily. In fact, in July alone, the amount of Ethereum accumulated by whales is up nearly 95% compared to last month. One name that's really making waves right now is Bitmine Immersion Tech. They've quietly but aggressively stacked their bags to become the largest single Ethereum holder in the world. Sitting on a mind-blowing 833,100 Ethereum, moves like this aren't random. This is a loud, clear signal of long-term conviction, and the bulls are taking notice. On top of all that, the Petra upgrade has brought some major improvements to Ethereum, especially when it comes to staking. That's been a big catalyst. From the 1st of June to the 15th of July, investors have staked an additional 1.5 million Ethereum across various platforms. And finally, we can't talk about Ethereum's momentum without mentioning the legal tailwinds in play right now. President Donald Trump's administration is actually following through on promises he made earlier. reshaping and loosening crypto regulations in the US through legislation like the Genius Act and the Clarity Act. These moves are sparking a wave of optimism and pulling big money back into the market, with Ethereum sitting right at the top of the priority list for many institutional investors. Now, the Clarity Act in particular is a big deal. It's all about defining once and for all whether a token should be classified as a security or a commodity. That's been one of the biggest sticking points between the SEC and crypto projects for years. If this passes, it could put an end to countless lawsuits, giving tech companies the legal green light they need to build blockchain products without fear of regulatory whiplash. And make no mistake, a clear legal framework like this could position the US as a global hub for blockchain innovation. And when that happens, you can bet Ethereum will be one of the biggest beneficiaries. Now, the Genius Act, this one's all about the issuance and exchange of stablecoins. These are digital currencies backed by real-world assets like the US dollar, or even commodities like gold. And here's why it matters. This bill doesn't just beef up investor protections, it also opens the doors for institutional capital to enter the market in a fully legal and transparent way. That means big funds, major banks, and Fortune 500 companies can confidently invest and build products on blockchain without worrying about regulatory backlash. But here's the real game changer: Donald Trump himself. For the first time in US presidential history, we have a sitting or former president openly backing crypto, both in the media and on the campaign trail. This is huge. Up until now, most US politicians have either been neutral or outright hostile toward crypto. Trump's public support is a clear signal that America is opening up in the race to attract and innovate in blockchain technology. A sharp contrast to China, which has gone as far as banning Bitcoin trading and mining altogether. And lately, Trump's been pushing for a full overhaul of US digital asset policy, after rallying strong support from the crypto industry during his campaign. And here's where it gets exciting for us. Ethereum stands to benefit the most from these developments. Why? Because it's still the most dominant smart contract platform on the planet. It's the #1 altcoin by market cap, and it's the foundation for blockchain solutions being built by giants like JP Morgan, Microsoft, and Visa. If these bills actually pass, we could see tens of billions of dollars in fresh capital flowing into Ethereum. Not just from traditional finance, but from real-world applications too. We're talking banking, payments, gaming, AI, data, all tapping into Ethereum's network. And every token built on Ethereum would finally have a clear legal framework, making it so much easier for projects, startups, and DeFi platforms to grow without living in fear of the SEC suddenly cracking down. Now, if you're serious about maximizing profits in this run, you can't afford to overpay on trading fees. And right now, there's a limited time way to cut those fees in half. Make sure to sign up using my exclusive referral links below for Binance, OKX, Max, Bybit, BingX, BitGet, and Gate. You'll get up to 20 to 50% off trading fees, plus welcome bonuses worth up to $5,000 or even $10,000. Depending on the platform, these are limited time offers and only available through trusted partner links, so don't miss out. Check the description below, sign up today, and start trading smarter. Now, let's put Ethereum's recent performance into perspective by comparing it with some other major coins. Looking at Solana, it's obvious, Ethereum has had the bigger advantage in this rally. Solana hasn't climbed nearly as much in the same period. As for BNB, it's up about 42% over the last 40 days, which is solid, but still modest compared to Ethereum's surge. And Ethereum's rise has also fueled strong growth across the entire altcoin community. That said, there are some key things we need to keep an eye on. First, the macro risks. The cryptocurrency market remains heavily influenced by global macroeconomic factors. Sudden changes in Fed interest rate policy, swings in the US stock market, or geopolitical tensions in hotspots like Russia, Ukraine, or the Middle East. All of this could trigger a sudden outflow of capital from risk assets like crypto, and sometimes it doesn't even take a major crisis. Just one hawkish move from the Fed could be enough to slam the brakes on this rally. Second, the internal risks for Ethereum itself. Yes, It's the biggest and most trusted platform in the Web3 ecosystem, but it's not without its own challenges. And that's exactly what we're going to dive into next. First up, staking concentration. Right now, a huge portion of Ethereum staking is happening on just a few platforms, like Lido. And while that might be convenient, it creates a decentralization risk, which ironically makes the network less secure. Then there's competition. We're seeing the rise of rivals like Solana, Aptos, and newer blockchains boasting faster transaction speeds and lower fees. If Ethereum doesn't keep innovating, that lead it's enjoyed for years could start slipping away. And finally, the psychological risk. FOMO and bull traps are very real right now. These recent price surges can easily push smaller investors into making impulsive moves. It's the classic story. Price keeps hitting new highs. People get caught up in the hype. They go all in without a clear plan. And if Ethereum hits a resistance zone and pulls back, that's a textbook bull trap. Those who rushed in at the top could be staring at big losses. So what's the play here? If we're talking long term, you've got to believe in Ethereum's potential genuinely, and in the broader future of crypto, I think a dollar cost averaging strategy, buying in gradually and consistently over time, is still the most sensible approach. As for portfolio allocation in the current market, here's what I'd consider. 40% in Bitcoin. It's the least volatile asset in the space and serves as the anchor for the entire portfolio. Then bump Ethereum up to about 35%. After that, 15% into top altcoins, carefully picked based on current tech trends and narratives. And finally, keep 10% in cash or stable coins like USDT or USDC, just in case we get hit with unexpected market swings. And I'll say it again. Sticking to a DCA strategy, whether you're buying weekly, monthly, or just on a consistent schedule, is still the safest way to play the long game. So there you have it. My scenarios and analysis on Ethereum right now. Hopefully, this gives you a few new perspectives on both Ethereum and the broader crypto market. If you want me to break down a different coin in detail, drop the name in the comments below. I'll check which ones are getting the most requests and I'll make a deep dive video on it. Thanks again for spending your time here with Crypto with Harry. I'll see you in the next one. Stay sharp, stay safe, and happy investing.